Good morning, everyone, and thank you for joining us on the last webinar for 2024. I'm Olivia Rios, Director of Operations and Programs, and we have a great program for those interested in taking advantages of tax breaks and purchasing new equipment before the end of the year. Our speakers are both with U.S. Bank. Eddie Reyes is Vice President, Relationship Manager, and Denise Mann is Equipment Finance Specialist, and they'll share how you can replace or add new equipment for the coming year, how incentives work, and how to invest in equipment to maximize tax credits and more. Before we start, we ask that you mute yourselves, write in where you're coming in from. We'd love to hear that and ask any questions you may want answers to. At this point, I'd like to welcome Denise and Eddie. So welcome.
Awesome.
Thank
Thank you. My name is Eddie Reyes. I am a business relationship manager here at US Bank. Happy to be here. This is our fifth webinar for 2024, and then obviously the last webinar for the year. Really excited to share information. I mean, we've done webinars on credit cards, on financial acumen, on SBA, and now equipment financing. This is actually our second webinar on equipment financing. We did one last year around this time as well. If you're interested in any of those webinars, please look at the LA Latino Chamber website. They're all stored there, wealth of information, so you can continue to learn and grow your businesses. So again, really excited about this topic. Let me just kind of jump right in a little bit. So we're doing a webinar today on equipment financing, specifically around accessing the bonus depreciation in Section 179, or at least being aware of it, right? So what we're going to do today is we're going to meet the U.S. Bank equipment finance team for Southern California. We're going to talk a little bit about equipment finance trends. We're going to give you a live example on Section 179 and bonus depreciation. We'll go over some of the expertise we have in that industry. We'll leave plenty of time for Q&A. It's going to be very short and sweet. Again, we did this last year as well. There's a part one to this as well, but this is really a part 1A, if you will. And we'll do a short and sweet presentation and leave plenty of time for questions at the very end. So here is our equipment finance team. My name is Eddie Reyes. I'm a relationship manager with US Bank. As you can see there, we have two awesome support associates that I work with on a daily basis, Denise Mann and Stan Kukowski. Stan's not able to be here today, but Denise is going to be here and talk a lot about, general equipment financing. We got 20 plus years of experience on this webinar. I've done this for a while now, so very familiar with a lot of the ins and outs of equipment financing and the different things that we can do for you. If you notice if you notice under my picture, there's a QR code. That actually gets you my contact information. So please feel free to reach out directly there and save that on your phone. I can access Denise and Stan on your behalf if you have any questions. Throughout the presentation, you're going to see this QR code embedded in different slides. So just in case you missed this one as well, okay? So industry trends. 40% of equipment purchases happen in Q4, right? And, there are several reasons for that. The biggest reason, obviously, is what we're talking about today, is Section 179, right? So CPAs would advise you to invest in equipment to basically maximize your tax incentives, right? The limit, which I'll talk about in detail later, is over $1 million. And plus, there's a bonus depreciation that's still available. And a lot of CPAs, especially if you had a great year, will really use this as a tax strategy to minimize your taxes and effectively lower the cost of the equipment, if you really think about it, right? Secondly, many businesses consider capital expenditures and budgets to replace their annual equipment for the upcoming year. So as we're ending the year, they look at what projects they have next year. Do they have the right type of equipment to really fulfill those projects? I just did an equipment finance loan for a very successful nonprofit organization. Excuse me, a very successful nonprofit organization that's looking at a 15 passenger van, right, to fulfill a government contract that she received. So she needs that for next year. So we just submitted an application for that, right? And that's another part of it. And then thirdly, many financing decisions are being made now with orders for the 2024 equipment purchases. So in other words, a lot of this is made to order. I just had a really large crane operator in LA that is interested in buying a brand new Peterbilt flat truck bed for their crane to basically move it from construction site to construction site. And that's something that has to be made to order. They want to have it up and running for the beginning of the year. So they place this order now to have it available for next year, right? So that's another reason why a lot happens in the Q4. And then lastly, vendors know this buying cycle. A lot of times, they understand that the Section 179 is out there. There's a lot of seminars, a lot of conferences, a lot of trade shows for equipment vendors, and they're really trying to make sure your consumers are aware of all the incentives that are out there. Pricing is very competitive, so there's just a lot going on in Q4, and that's why 40% of these purchases happen in this quarter. So let me dive right into how Section 179 works. Okay, so this is very simplified. Okay, so when a business buys a piece of equipment, they're basically able to write that off a little over time through depreciation, right? So straight line depreciation is what's called. So typically a $100,000 piece of equipment or machine, may get written off over a 5-year period. So that's $20,000 per year. Now, this all depends on useful life of the equipment. There's 1,000 other factors that go into this, but I just wanted to keep this example very simple, right? Most businesses preferably would like to write off the entire equipment purchase this year when they buy it, right? So imagine if you could write off the entire amount, instead of having, writing it off over several years. A business may be enticed to basically buy that piece of equipment this year as opposed to waiting, 2-3 years to basically buy it, right? So there's some incentive behind that. So the whole purpose of Section 179, which was rolled out back in the 80s, is really to entice customers to buy equipment and then really move our economy in the right direction, right? So very simple. And as I'm going through the presentation, if there's any questions, we'll do a Q&A. Please put them in the chat. We'll have Olivia kind of monitor those, and then we can read those off at the end and go over those questions as well. Just I don't want you to forget your questions. So again, quick disclaimer: we're not CPAs. We're not tax advisors. We just really want to make sure you're aware of Section 179 and how it works. But basically for this year, and actually this slide's a little dated, but for this year, Section 179 has increased to a limit of 1.22 million in basically allowable tax incentives, right? And up to I think it's $3.3 million in total purchases, right? So if you keep your total purchases under $3.3 million, basically you can write off up to 1.22 million. Again, speak to a tax professional. We're not tax professionals, but it's a great thing to do there as well.
Hey, Eddie.
Yes.
I'd like to add something back in regards to the crane deal that you were speaking of, because I think it's very important.
Absolutely.
This particular customer, the equipment won't be ready till mid to late January, but the customer really wanted the tax credit for this year. So we wrote this deal up, and we will fund this deal now and give the customer a deferred payment. So that allows him to use the tax deduction, and then his first payment won't be due until the truck is actually ready. So from a Section 179 perspective, it's really going to save the customer a lot of money.
Great point. Here's the updated limits. That's 1.22 million, purchases of less than tad over 3 million. A couple other things to know: the equipment you're purchasing has to be used at least 50% or more for the business, right? And in addition to that, there's some bonus depreciation, which I'll speak about briefly in this next example. Okay, so here's really a really cool example, really simple to understand on how it works, right? So let's just say, for example, a client, our business owners use. Let's just say, for example, a business owner buys a piece of equipment for $1.3 million, right? We talked about the maximum they can be able to write off in 2024, right, is $1.2 million, right? In addition to that, anything excess over that and the purchase of the equipment, there's some bonus depreciation. It's actually going to be phased out over the next several years, but it currently stands at 60%, right? So that 48,000 is basically, your 1.3 minus your 1.2, it's 80,000. 60% of 80,000 is 48,000. Okay. So technically, okay, the first year deduction for this piece of equipment is $1.268 million. Okay. Instead of, normal straight line depreciation, which is zero. So now if we look at the tax savings of that piece of equipment, okay, and we think we use the next example, a tax rate of 35%. I mean, that's almost $443,000 in taxes in cash that instead of sending to the IRS, you're basically keeping it to yourself, right? For your equipment, right? And so essentially the effective equipment cost after the tax savings is 856,000, right? 200. So it's just a great strategy, tax strategy. Again, we're not tax professionals. I'm not a CPA, but a lot of my customers take advantage of this. So definitely have a conversation with your CPA or whoever, gives you tax advice on that. I know the chamber has several CPAs out there. We can introduce you to one if you don't know one, but take advantage of it, because again, if you don't use it this year, you definitely lose it. So that's that here. Okay. And then up next, Denise is going to cover a little bit about some of the finance options we have at US Bank. So Denise, over to you.
Thank you. So let's go to financing for your business. Why do people finance for their business? The biggest reason is because they save and preserve their cash. Also, it allows people to make large purchases with no down payment and finance 100% of the equipment. That also allows you to roll in other costs on that equipment. For example, if you buy a truck and you want to have it wrapped with your logo, that can be included. Racking for a truck, that can be included. Delivering installation fees can be included. It allows you, we also do leases, which allows you to structure your payments based on your cash flow. So we do a lot of equipment finance, but we also do leases. Computers, technology type equipment usually has to be replaced every 2 to 3 years. Doing an equipment finance will allow you to continually to upgrade to keep up with the times. And it's a really efficient process. The approvals are quick, generally within 4 hours. We do all the documents these days electronically, so customers don't have to leave their house or their business. We have flexible financing. We finance up to $2.5 million. We have a simple application process. We can go up to $200,000 with just a simple application. Anything above $200,000 does require a financial review. Customers may get a pre-approval. Maybe they want to buy something, but they don't exactly know what it is yet, but they can get an approval now, and that approval will be for 90 days. So that gives them time to look for equipment. Another great thing about equipment finance is you can roll multiple pieces of equipment into one loan. A lot of people like that. We also offer flexible payments for businesses that might be seasonal. Say it's a landscape company and there's 3 months out of the year where they're not working. We can offer seasonal and skip payments to meet their need. Right now we're looking for businesses that have been established at least 3 years. Like I said, we have a really quick turnaround. We finance so many pieces of equipment. You might not even think about all the things. One thing we do a lot of construction, material handling. We do a lot of IT projects, technology, software, and even consulting. We do medical imaging. Down in LA, we do a lot of ambulance business. Restaurant equipment is a little bit tougher. We're kind of steering away from restaurants right now, but never say never. Currently, I'm financing a lot of used vehicles, a lot of contractors, painters, plumbers, electricians. They might want to buy a truck or a van for their business that might be 2 or 3 years old. And we're the go-to for that type of financing. A lot of dealers don't want to finance the used pieces of equipment. On vehicles, we don't have any mileage restriction or age restriction. So it can be a new truck, it can be a used truck. We will also finance automobiles, actual cars, as long as they are for business needs and we can show that they are used for business needs. The next slide actually talks on our machine tool division for manufacturing, and Stan isn't with us today, but I just want to give a shout out. U.S. Bank is one of the biggest machine tool finance companies, I think, in the whole United States. Stan can do manufacturing equipment up to $750,000 with just a one-page application. He also does new and used equipment. They also do refinancing, and the terms can go out to 84 months. Again, they offer deferred payments and progress payments to vendors when available. Again, quick turnaround time, electronic documents, and simple documentation. But this is definitely the time that people are buying equipment. We actually have an online application, and we are seeing in the last couple of weeks a lot of businesses are going online and applying for equipment purchases. And we are the one group that, even though it's almost mid-December, we can still make those transactions go through and help the customer meet their needs. And that's my story, and I'm sticking to it. And I would love to have some questions.
Awesome. Yeah, a lot. Again, here's another. I think we probably missed this one, but here's another, just a quick list of all the manufacturing pieces of equipment that our division, could finance as well, which is really cool. But again, promise you to keep it short and sweet. We wanted to leave the rest of the time for questions and answers.
We're a systems integration company. We build studios and production studios for clients.
Mhm.
And we usually recommend, like I put in the chat, we usually recommend business leasing rather than like a business financing, because it's usually 100% tax deductible and there's no capital gains and you're not stuck in equipment, and usually the payments are pretty low.
Mhm.
I mean, what's the difference between your programs and a business leasing programs?
Hi, Jeffrey. Our group, actually, we do equipment financing and we also do leasing. So we have available both products. We always let the customer decide if they want to depreciate or if they want to just expense a monthly payment. And in your world, the equipment probably gets obsolete after a few years. So a lease would make sense for those types of customers. But we do have both products.
Yeah, thank you.
On the crane operator that we were working on, obviously being able to, finance that this year, take advantage of Section 179. That was a great win for our customer, and, being able to do that. Can you talk about how you funded it, what the funding looked like, and, how the,
Yes,
the dealer was on
of
board?
course.
Yep.
Well, what we are doing is the cost of the truck was $224,000. We are going to execute the loan. We are going to disperse 80% of that money to the vendor now, and we are going to hold the 20% until the truck is completed. But regardless, the customer gets credit for the full amount of $224,000 this year. And then we have set up his payments, so his first payment won't be due until February. So it just really, it's a win-win-win for the customer.
Awesome. Thank you. And then if you could also just speak real quickly to just, some of the, obviously we have a lot of different businesses that I've talked to through the chamber throughout the years, right? But can you talk a little bit about some of the office kind of related, right? Because we're thinking of equipment in terms of, construction equipment sometimes or things like that. But I know there's a lot from an office perspective that we can do as well.
Sure.
Can you just share a little bit about maybe things that
Sure.
people didn't think about, right? We can finance.
I mean, I don't know if any of you are sitting in an office or a conference room right now, but for example, the table that you're using, that's considered equipment. The chair that you're sitting in, that's considered equipment. If there's a whiteboard on the wall, that's considered equipment. So office equipment can be anything that is inside the office to make it run, from the computers to the wall boards, to the chairs, to the tables, to the phone system. Any of that stuff is considered office equipment.
Very cool.
Oh, that.
All right.
So for those who are going into new office spaces, it
Mhm.
would be a great idea to upgrade some of your equipment, and you can get a loan or the equipment finance through US Bank, correct?
Absolutely.
One I thought from David Mora, what are the terms typically, and does it vary based on the equipment?
As far as terms go, we offer from 12 months to 72 months. So we allow the customer to choose their own term, whatever fits into their budget. So the most popular is a 5-year term. Technology equipment, they might want to do a 3-year term if they're going to replace it. So yeah, the terms are open.
Good question, David. Thank you.
One more, Olivia, that just came in from Rudy Gutierrez. So Denise, the application process and requirements for a construction company specifically, and it's up to 500,000. You know, as you mentioned, up to 200,000. You know, there's no financials. You know, it's just a
Correct.
one-page application. But if you could just talk about the difference of going over 200,000, and then anything particular for a construction company.
Sure. Actually, construction companies are booming right now. Since the election, we have seen an influx of people buying construction equipment. We go up to 200,000 on an application only. That means we don't need tax returns or any of that stuff. If you want to finance over 200,000, we would need a full financial package, which requires 2 years of business financials, 2 years of personal financials, a debt schedule, and a personal financial statement. Most contractors right now, what I am seeing, are looking for between 150 and 200. That seems to be what's going on right now.
So at this point, I'd like to thank US Bank, Eddie, Denise, and Stan, who couldn't join us, for this important information. I know that many of you, as you close your books through the year, are trying to find savings, and this would be an excellent way for the tax benefits and credits. So to upgrade your equipment, you know, are you relocating or anything like that, especially on vehicles. So I want to thank you again. Is there a way to secure the debt only with business assets? What's the reasoning for securing with personal assets?
We actually, when we finance a piece of equipment, say Eddie's crane, we are going to put a UCC on that crane only. We don't file on any other personal assets. We just file a UCC on the specific piece of equipment only.
Randy, did that answer your question? Yes, thank you. We're really grateful for you attending our workshops, and we hope to see you in 2025. We're working on some really great programming, and we'll hope you join us then. So thank you, happy holidays, and we'll see you next year.